Let's rewind. Friday, we got May's Consumer Price Index, inflation at the consumer level. Tomorrow, the May PPI, the Producer Price Index or Manufacturer's Index on inflation. It could be the key to the Federal Reserve jacking up rates higher than the 50 basis point increase that's been widely telegraphed by Jerome Powell and company. Here is the expectation that actually that's for the CPI. Let's look at PPI. The estimate here, up 10.9%. 8:30 a.m., the number comes out tomorrow. Core, that excludes the often volatile food and energy, up 8.6%. What if the Fed looks at that nearly 11% handle and says 75 basis points, we need to increase the Fed funds rate there? Let's bring in today's countdown closers with 5 minutes left to trade. We've got Commerce Street Capital CEO Dory Wiley and Columbia Threadneedle Investments Head of Integrated Equity Ernesto Ramos. Threadneedle has $699 billion in assets. Ernesto, I will begin with you. What if? And then what happens with the markets, and what will you be doing for your clients?
So I think there's a good chance that they might want to front end the 75 basis points. They've said they're going to do, or the market is pricing in, they're going to do 50 now and 50 in July.
Correct.
So why not front end 75 now? Give the market some confidence that they're really determined about killing inflation, because right now the market is trying to thread the needle between higher inflation and recession. And I think that the Fed has to get in front of the curve with respect to that. So it'd be great if they would front it 75 basis points.
And you're not worried, Ernesto, that the markets would completely freak out and that would, let's just say they did. We saw an even bigger selling pressure than we've seen today. What would you be buying in that case?
Well, so two separate questions. The first one is, I think the market would actually see it as a sign of relief, because they can always take it back and not do the 50 at the next meeting if inflation starts coming down in fact. And what we're buying, what we have been buying for the last few months, is lower risk, profitable companies with solid business models, because we're in an environment where demand has to be destroyed in order to bring inflation down. Yeah. So you don't want to be long the consumer, and the consumer stocks are getting completely annihilated. And you don't want to be long duration stocks, because those have also been quite crushed. So low risk, profitable, attractively valued companies is what we're buying in sectors such as biopharma. Energy has got its own dynamics. They're so strong, and as well as those are two sectors that we like.
Well, yeah, biopharma has certainly gotten beaten down, and it's getting slammed today. Dory, you like energy. Energy has had some very strange behavior today. As we had mentioned, crude oil began to plummet along with the rest of the energy complex, and then just a couple of hours into trade, it managed to peek its head up just a couple of cents, turn into the green, and then we can't seem to stay there at the moment. But what names, what type of energy in the subsector do you like?
Well, first of all, I wouldn't get too hung up on whether energy is going up or down today. Fundamentally, markets crash because they're oversold, not because they're overvalued. So we're getting pretty close to a crash scenario today, and officially in a bear market. I expect it to continue, so I think investors ought to be wary. But energy is the only place where analysts are actually upping their estimates, where they actually have a chance of hitting their forecast, and hitting something like a pioneer, where the limitations of the administration and government policies aren't as effective, because they drill in the Permian, they dominate in the Permian. The dividend flows are huge there, so that's a great stock to own, as well as Chevron, and there's a beta play obviously in most of these energy stocks, but my favorite is Pioneer.
I do have to say, though, and Ernesto, Dory has been on the right side of this, because energy has just been the winner. Today it's the loser here. But in the macro picture, where do you see the markets going for the rest of the summer? Choppy trading, kind of plateauing?
Until we see a couple or three sequential month-to-month CPI prints going lower, I think it's going to be super choppy and super volatile. as the market sees those three sequential month-on-month declines, they will start pricing in the end of tightening, and that will be when the market can lift off again.
Ernesto, Dory, in these final few minutes, you guys have brought it. I can say now, though, that the S&P has officially entered bear market territory and will close there, down nearly 22% from its record close. All three major indices closing at 52-week lows.